All right, y'all. What's good? What's good? Trade ideas for a new day and a new age. We are back again. Let's go ahead and dive in and let's look at some. Everybody's talking about banks lately. Let's look at these banks and let's see the actual financials, right? Like we could talk about gossip, and we could listen to the news and have them tell us doom, gloom, and destruction, or we could go and look at the data ourselves because guess what, y'all? We got access to all of it. So what we're gonna do is we're gonna go ahead and filter by finance. Maybe industry. Let's see what industry they have. Do they have the industry we're looking for? Probably under just finance, I'd imagine. So let's go ahead and look at finance. Let's sort it by assets. All right. All right, well, we have a bunch of finance stuff towards the top. Let's sort by current assets actually. Oh wow. Yes, okay, so let's look at JPMorgan Chase. Currently they have 1.647 trillion assets under management. And honestly, what I want to see now as well is we see they have 563 billion in debt. They have a pretty good ratio there. They have a good amount in their war chest, a really good amount actually. That's actually very, very good. So, I mean, if we're looking at the price action of this, didn't do exactly what I was thinking it was going to do prior. So we're going to go and clear that. Let's get JPMorgan Chase real quick. Let's turn this down a bit more. All right. Okay, so all right, cool. So we're looking at here JPMorgan Chase. It looks like it's in a bullish run, right? Pre-market 128, $120.49. It looks like it's actually starting to go short-term bearish if we're gonna be betting man, which we are every single day when we come into these markets. We'd look at something like that last down move for the up move somewhere in here, right? And this is on the weekly, so maybe we can go to the 3-day. And we can see that, yeah, I mean, pretty much price action starting to get to a point where $114 per share, you can even buy this. I don't know where you would buy this, probably Robinhood. So, I mean, we're looking at this and it's like, okay, well, is there anything bad about this? I don't think so. Like, when you look at their war chest, they have a very, very large war chest. I mean, I guess debt to equity ratio almost 2, which in my mind, right, like 2 times this, right, is this. So they're seeming pretty healthy in my opinion. Seems like they have current assets, they have they have some debt, but would they fail in the bank run? I don't know. All right, Mitsubishi Financial Group. Let's look at what they're doing. 1.26. I mean, 704 billion. 1.26 trillion. So I'm reading this wrong then. Debt to equity ratio 1.25. Is this the current ratio? Let's look at these. I am reading these incorrectly. So hold on one second. Is there a way that I can actually go to an expanded balance sheet? There has to be, right? There absolutely has to be. So what we're trying to do is we're trying to see the actual financials of this company. There we go. All right, dividends, performance. There has to be another view here somewhere. Income statements, balance sheet. There we go. Okay, total assets, total liabilities. So I mean, the green are the assets, and of course the red are the liabilities. I mean, they're really close. So let's go ahead and actually go back to JPMorgan Chase and look at that real quick. Let's go over here. Yeah, so they're pretty close. So they actually have more liabilities. So this down here is not really telling us the full story. Right, total assets and liabilities, 3.67 trillion in assets, 3.37 trillion in liabilities, debt to assets ratio. So, I mean, basically their debt's almost totally eclipsing their assets. So let's go ahead and look at the cash flow. A lot of their cash flow comes from investing. I mean, obviously, that seems the most. Not as much from financing, which makes sense. They're a bank, so who they're going to be financed by, besides federal governments or the government banks. Look at annual. So annually, I mean, can we expand this and look at this a bit more closely? Yeah, let's do that. Because we can see the charts, right? That's cool. We can see the price of the actual ticker itself, and we can actually look over here at these financials. And it looks like, a majority of their cash flow is from their operations. What does that actually look like? To be honest with you, I'm not 100% sure. Let's click more financials. Yeah, you can really get a bit deeper in here. From operating activities, funds from operation, deferred taxes. Whoa, hold on, what is this? Deferred taxes. Deferred taxes represents the net increase or decrease of a company's deferred taxes reported as non-cash adjusted in order to reconcile net income to cash flows. These are derived from a company's operations. Interesting. Don't know what that means. My little brain can't understand it, unfortunately. All right, so I mean, we know a majority of the cash it seems it comes from quarterly. Q4 last year, they made a lot more from investing. Overall, on the year though, if we're looking at 2022, they made they made 99 bill from their operations. They actually were at a huge loss from investing and financing. Wow, that's interesting. It's cash flow because when they're investing, it's flowing outwards. Because these are positive, these are negative. So I assume that means something. Free cash flow, 99. It doesn't look like it's taking these into account. Okay, fair enough, fair enough. Okay, so I mean, what would say that this is healthy? I mean, they have what they're supposed to have like 10% of reserves. That's what they would say. So I mean, we'll just keep looking at these graphs and see if there's a trend that we can really identify. I mean, over time, it seems like really, if you're looking at this total assets, their total assets haven't really grown over the last few years since 2017. Maybe by what is this 289? I mean, we're starting to get back to this 289 in assets under management for Mitsubishi UFJ Financial Group. Not sure who they are, but they obviously have a lot of money. They have under JPMorgan and all these different funds or whatever these things are, depository shares. They seem to have the next most assets under management, which is absolutely fascinating. So let's go ahead and look at the monthly. Let's reset Mitsubishi Group. What do y'all do? Oh, whoa, 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 whoa. Oh, they're not doing a whole lot of anything. Look at that. Oh yeah, they dropped pretty significantly. $6 per share. Six. Oh yeah, they came all the way up there. I mean, looks like it's bullish. I mean, if you were gonna go ahead and trade into this, then I mean, somewhere like probably gonna fill some of these gaps all the way down there. It opens, it comes up, right? So last down move for the up move, probably something in there. I mean, if you were gonna trade this, which I don't know where you would trade this. Maybe you could find it on Robinhood, but let's look at Citigroup. Let's go to Citigroup. Citigroup. What do they got going on over here? Let's look at their balance sheets. Yeah, I mean, it looks like a lot of debt to asset ratios are 90 to 92% so far across these three. Majority of their money comes from financing. Interesting. Citigroup, can we go to their website? Let's go to their website. Here, what I'm gonna do is I am gonna go ahead and add. No music. We need the music in the background. What's going on? You know, while we're sitting here chatting about all this good stuff. So we're gonna add another window, and I'm gonna call this research browser. All right, boom. Okay, so Walmart and Citi introduced the bridge built by Citi platform to Walmart suppliers. Awesome, sounds good. It's a cool little, nice looking website. What is their strategy? I mean, it's just Citi. I mean, I think everybody knows Citibank, right? But it's Citi Group. And I wonder, go here, banking. What I'm curious of is who are all their partners? Who's part of this? They have a lot of stuff here. Quarterly earnings, events, presentations, SEC filings, annual reports, proxy statements. They have some career stuff. Our impact, the businesses. Let's look at this. Banking, capital markets, and advisory. Because maybe this is where our good friends Citigroup Inc. is a holding company which engages in the provisions of financial products and services. It operates through the following segments: global consumer banking, institutional client groups, and corporate and other. The global consumer banking segment provides traditional banking services to retail customers through retail banking, including commercial banks, Citi branded cards, and Citi retail services. Institutional segments provided institutional public sector full range of wholesale banking products. Okay, so capital markets. So it looks like a majority of their actual cash flow is coming from their financing. So they're, in my mind, financing just all I think in my brain is propped up. But I could be wrong. When someone's financing something, they're propping up their worth in some way through using other people's money. That's just how I see it. Of course, I could be wrong, right? I know, when I take out a loan on my motor, when I took that loan out on my motorcycle, right? I mean, could I have paid it at that moment? Could I have bought it straight up? Yeah, but at that moment, I needed to build my credit. So I was just propping up my actual value through the use of someone else's money. All right. Let's see here. Okay, so we see breakdown. I mean, overall bearish, but you started to see some bullish price action. We started to see some, right? Because if we're looking at this price here, right, it came down, came up, came down. Oops. Clear some of that, right? Came down. Oops. Came down, right? Came up, came down. We broke up, right? Broke up, boom, broke up. Came all the way down, we broke up. So even if we were starting from over here, now this is valid for buys from the last down move, from the up move. And what I see here is I see at price from, it looks like from $40.01 to $41.36. I'd be probably looking at that zone if I was going to go ahead and buy into this particular asset. That's what I would be looking at. So, and I mean, pretty much when we're looking at it right now, most of them are. I mean, Mitsubishi looks more bullish than bearish for sure. JPMorgan looks bullish. I mean, again, short-term bearishness right now. I mean, maybe it's because of the news. Maybe people are divesting. Maybe someone's even trying to get a banking charter and they're throwing people under the bus. Who knows? All right, Barclays. What's Barclays doing? Let's go ahead and check it out. Balance sheets. They've been consistently growing. Ooh, their debt to asset ratio a little bit higher this year than last year, but they've always been hovering around 95%, a little bit higher this year. but they've been consistently growing. 1.44 million in assets under management. Yeah, now they're at 182. 44. I mean, yeah, I think they saw the most growth in their total assets from 19 to 20, and then from 20 to 22, it seems like they stayed kind of in that ballpark from 1.80 to 1.89. It looks like 87. But that's just their balance sheet. Just look at their cash flow. Financing is majority. Not a lot of money coming from their operations or their investing. They're financed out the wazoo. So who's financing? Operates the bank holding company. So obviously Barclays. Probably Barclays is financing. And I'm assuming this trading instrument is just a fund. So I went to their website. Let's go ahead and check it out. Can I do this? Oh, I can. Nice. Okay, so yeah, Barclays. We only want the default trash cookie. So who are we? Who is Barclays? They go back to who were doing business on Bar Street, 1690, 1739, someone's son. James Barclay as a partner, and the names have remained in constant presence in business. Okay. Goldsmith Bankers. All right. Looks like they have a quite robust history. Been around for a long time. Looks like they're pretty trash at this moment. But who am I to tell? I haven't dove into how they all make their money, where that comes from, all these different things. So how would I actually know? But what I do know, oh, hold on. You're not seeing this. Ha! Yeah, I was just looking at the history page. So all I was saying is what I do know is that we can see in pre-market, we can see Barclays is starting to fall off a cliff here. If you look at the 12 months, this fund looks like it hasn't been around PLC. Yeah, I mean, it's bearish, pretty dog shit. Or it could just be, again, like everything else at the moment, is just in a bearish push at the moment, right? So if we look here, let's go ahead and bring up our market cipher. You know, you see money flow just red, right? Red. But you can see the hump starting to come up, right? So if we're looking at this indicator, we're starting to move up a little bit. And so, I mean, if we're looking here, we might even see a bullish divergence, in which case you can probably go ahead and pull the trigger on the monthly to see about running these highs here, right? Of course, we'll come back to these at a while's time, but for measuring, I mean, if we're gonna say these candles are gonna come down and close. So for instance, if I'm looking at down here, market cipher, it looks like it's still coming down a bit, right? So what I want to do is I want to say something like that, and then like that. So then what do? We just pull. Whoops, let's do that. And we pull this here. We're like, okay, well, when are we probably going to come up right here? You know, 7 bars, 215 days. Is that true or not? I mean, who knows? No one really knows. But what we do know is that we can wait for price to come down here in this, what is this, $109 to $149 range. Just make sure, yeah, $1.09 to $1.49, and see what happens from there. And see if we can go ahead and see Barclays run all the way up to $3. All right, let's go on to the next one. What is it? Sumitomo Tiles. You gotta be Sumitomo. Okay, so Sumitomo looks like complete trash, like dog doo-doo. Let's go ahead and reset. Yeah, I'm not even gonna look at this, although they have 880 billion under management. Can we see Credit Suisse? Because everybody's been talking about Credit Suisse, right? Ah, here we go. So they have 231 under management. They have 223 in debt. Let's go ahead and look at their financials. Oh yeah, they're falling off the cliff, y'all. But they've been falling off the cliff, right? They've been falling off the cliff. It's just now everyone sees it. Everyone is public now. Maybe somebody decided to do something unimaginable. So yeah, I mean they've been trending down this entire time. Everyone's talking about Credit Suisse. They've been trending down, so it's not a doesn't look like it's a surprise. So can we go silicone or SVB? Is this it? SBV and T? No, I don't think so. Is it holding a wholly subsidiary of Spring Valley Bank? No, so this isn't it. Yeah, we can't find it. Okay, fine, that's fair. So, I mean, like the Credit Suisse thing, everyone's talking about that, and these banks collapsing. I mean, you look at a lot of these banks, Morgan Stanley. All right, let's look at this. They're pretty green right now, and actually they got a huge boost in revenue. It looks like this year thus far. They're about 91% debt to asset ratio, 1 trillion under 1.18 trillion under management, 1.08 trillion in liabilities. Let's go ahead and look at the cash flow. Uh, Money from financing is going down, and it's starting to come in line with their actual operating. So I mean, you know, they've been trending up in operating, so it looks like they're making money from their operations as opposed to just the financing from the bank in and of itself. Let's go Chinese construction bank. Oh, by the way, the Morgan Stanley looks like we're looking at. I don't know how I put that there. I don't know when I put that there, but I did put that there at some point. And I guess what we're waiting for is for it to come back. We're waiting for it to come back to $94.48. Somewhere between $94.48, $99.20. But ultimately, what do we want to see? Well, we want to see it drop all the way down to a nice range of $54.30 and $46.42. That's the next zone that I've identified. Which, I mean, if we're looking at that, that's pretty doom and destruction, Brandon. Holy shit. Be Philly. Alright, so, I mean, yeah, looks like we're still pretty bearish here. Yeah, we are bearish, but maybe short-term bearish, to be fair. Because we started a bullish push, now we're bearish, but we're starting to break this overall structural point at approximately $84.27. And so we could see price start to come down to the level between $76.14 and $78.54, at which point we could probably see a rebound to come back up to this 94, which, I mean, that's a lot of volatility. When I'm looking at the daily chart, I mean, you're not seeing a ton of volatility day by day, right? You're not seeing this thing move, you know, $10 in a day. The most you're seeing this thing move, really, I mean, if we're taking, what, like on average, let's go ahead and look. So maybe like 4% or 5% in a day, potentially, or it does like 19 million in a day worth of volume back, well, just in one direction. So I mean, you probably have to have a few billions or maybe even a trill to make that move in one day like that. So it's only moving about 5% of the day. If we're saying that, then we're like, okay, well, then we need probably like like 2 or 3 days worth of price action. And it has to be something drastic, right? So yeah, that's what Morgan Stanley. I mean, it's not looking particularly unhealthy, right? Net income 11, revenue 65, so 16% profit margins, which they could probably reinvest somewhere. Bank of China. What's the Bank of China looking like? Looks bearish, just bearish. Doesn't look bullish. It started to go bull, but then now it's going bear. And it's coming up to a zone here. I'd say here in between the $9.76 to $10.14 levels. In between there, maybe you look for a short somewhere in there. I mean, if you look down here at this indicator, it seems to be starting to curl down. Yeah, so if we're looking at their balance sheets, they're 91% debt to asset ratio. Their total assets under management $4,019.19, 3.86 trillion in liabilities. It's not too crazy. The cash flow, a lot comes from financing. What does that actually mean? And in my brain, I'm like, okay, what does that actually mean? I'll probably have to do a bit more research on that. When I think financing, I just think about a loan from somebody, right? And it's a bank, so who are they getting a loan from? From the people? Their depositor, some of their investors, or maybe even their central banks, in a sense. Okay, cool. So I mean, it's not looking too bad though. Not looking too bad. Royal Bank, CDA, Deutsche Bank. I heard people talking about Deutsche Bank. What's Deutsche doing? What are you doing, Deutsche? All right, let's go look at their balance sheet. Ooh, they've been trending down. 95% debt to asset ratio, 1.43 trillion in assets, 1.36 trillion in liabilities. I mean, most just like everybody else, financing, operating. I mean, when I look at this negative 2.20 bill in operating, I'm trying to understand what that means. It means they're bleeding money. I mean, in my mind, that seems like that makes sense, right? They're bleeding money. German engineering firms fairly robust, even if banking shock intensifies. Everybody's shocked by this banking stuff. So, I mean, if we're looking at the weekly, I mean, if you look at Deutsche, yeah, I mean, it's just been on a downtrend. Holy smokes. I mean, it went all the way from the high of $140.04 per share all the way down to $9.79 per share. Pretty crazy. And so right now, hold on, engage in the provisions of corporate banking investment services operates through the following segments. So it's corporate banking, investment banks, private bank, asset management, capital release unit, and corporate and others. Okay, so it's global transaction bank. I mean, if we're looking at, it looks like we could start a decent little bullish push. I mean, if you start looking at the price action in and of itself. All right, we came down, we broke down, we're breaking up. Right, now we're coming back down here to go up potentially. So, I mean, it's not, I don't think it's unheard of to just say that maybe we can expect that price comes down to, what's a good zone here? Game opened here, it's a pretty large zone. So, pretty much the zone between $7.39 and $8.59. So we're coming up on 28 minutes on this video. And so, yeah, we're seeing it. If we see it come down here, we could probably expect it to potentially run up here to $15.45 to $16.70. So that's approximately a, hold on, let's see if we can go ahead and get this. I mean, that's like a 78% move. I mean, we're seeing average volatility on this, like maybe 4% in a day, maybe. I mean, let's look at some of the larger moves when things just seem to get crazy. 22% in a day. Yeah, so, or in a week. My apologies. Let's look at the daily real quick. So we probably be seeing a few weeks. I mean, if it's 22% in a week and we're saying 78%, probably like 3 to 4 weeks of bullish price action to potentially get up to that. So I mean, that might be a stretch. But I mean, start looking at the prices. Maybe it could happen. So, anyways, y'all, I hope you enjoyed this particular session. Hopefully it was educational. I know it was educational for me. Learned a good amount about the different banks and really their assets, liabilities, and that a majority of these have a lot of financing, not really pulling any cash flow from operations. And I think we'll continuously do more of these. We'll start looking at stuff in the news, different sectors, verticals, really understand the financials behind it a bit more so that we can be more educated in things that A, we're listening to, and then B, the things that we choose to invest to. So anyways, I hope y'all have a wonderful day. It's your boy B Field. Trade life with B Field. I'm gone. Peace.